Well, Oliver, the way I started is I was working for a financial firm, and they were selling life insurance and mutual funds. And as soon as I heard about the mutual funds and started learning about them, the market had been going up. This was 1968. And so I really got excited about the mutual funds. I was losing interest in the insurance business because I didn't believe in the products that they had, and I was looking for another way out. And I really thought that I had found my dream, something I wanted to do the rest of my life. So I didn't know too many people with money, but I had some high school friends and people that I knew and from my insurance business. So I got them started in the mutual funds. And no sooner did I get started, it wasn't more than 6 to 9 months, and the market started on a sickening slide in 1969. And it went down and down and down. Finally hit a bottom in 1970, June 1970. It rallied up into 72, and then it had the major slide down from 72 to 74. And this was a period of 6 years where it was just like torture, just drip, drip, drip every day. And I saw these mutual funds just fall apart. And it really upset me because I had all my friends in it, and, they didn't have much money to begin with, and I didn't have much money. So it was really a soul-searching time. And as I thought about it, I started thinking, how could it happen? I used to listen to these money managers. They were so intelligent and so sharp. And how could this happen? So the more I questioned, the more I learned, the more I was thinking about it, I started studying about the market, and I came across surveys of, what the different funds did and who did well and who didn't do well. And I put aside the number of the funds. This fund did well, and this fund did well, and this fund did well, and this one didn't do well. And then I started seeing a pattern. They were all people who believed in Benjamin Graham. They were value investors. And while their portfolios went down, they didn't do anything like the majority of them. I mean, some of these mutual funds were down 50 and 75%. There was one fund that some of the fund went out of business. One fund was up 100%. The next year it closed. It was just a disaster. And the average investor suffered a great deal. The market went down 48%. The average stock went down 75%. So it wasn't totally the mutual fund's fault. It was just the environment. But I started noticing that most of these guys who had done a good job were all talking about Benjamin Graham. So I started reading everything I could get my hands on of Benjamin Graham, and Buffett wasn't that well known at the time. He had already been successful. He was leaving the business. And so the more I read about Benjamin Graham, the more it made sense to me. Coming out of a Jewish home, you learn to buy things at a discount. You know what I mean? So that made a lot of sense. I remember that I'd go and buy a sweater or a shirt, and my mom would ask me, "Arnold, did you get it wholesale?" And I said, "No, Mom, I bought it." "Oh, no, you're thinking like a goy. You got to buy it wholesale." So when I started hearing about Benjamin Graham, that you got to buy it at a discount from present value or intrinsic value, that clicked with me. That made a lot of sense. And I thought, this makes a lot of common sense. I didn't have an education, but I did have some basic common sense. I grew up in a home where people talked about business all the time. So I thought, this really makes a lot of sense. If I can buy it cheap enough, it's going to survive the market. So I studied everything I can get my hands on. And then coincidentally, I had a friend of mine that lived in my apartment, and he used to like to study the market. So we'd get together, and we used to call each other Tiger. And he says, "Tiger, I met a guy that you've got to meet. This guy is just phenomenally successful in the market. He's the research director of a brokerage firm." And I told him about you. He said, "I've only met one person that's more fanatical about studying stocks than you, and that's him." And so I told him about you, and he said, "Well, I'd like to meet you." So he arranged a meeting with us. Well, he was an ardent Benjamin Graham fan, and he sent me on the course. He just validated what I already studied. He says, "You ought to study this and you study this." So as we got to talking over, we had a lunch, And so he gave me a couple of ideas for stocks. And so I studied the stocks, and then I'd call him up and I would be digging into the company and asking him questions. And so he said to me one day after I was drilling him with questions, he says, "Arnold, my God, you really dig into these companies, don't you?" I said, "Well, I want to learn." He says, "Tell you what, I have a number of other ideas. If you'd like to run them down and do the legwork on them, I'd be happy to work with you." So I thought, geez, that's great. So here was a guy who was knowledgeable and experienced, successful, and he sort of became a mentor to me. And so we started doing research together. He was already very successful. I was driving an old beat-up car, and he drove a brand new Mercedes and had his own plane. You know what I mean? I went driving up in his car. But anyway, one day I'm standing out in front of an apartment building where I just moved in, and I saw him drive by, and I said, "Hey, Mark." He was driving a convertible. He looks over and he says, "What are you doing here?" And I said, "Well, I'm living here." He says, "I'm just moving in." I said, "Oh, man, that's great." So I'd go over there every night. We'd meet for dinner. We'd talk about stocks. And so I finally decided, I'm not going to do the mutual funds. I'm going to start my own company. So I had this idea to start my own company. I had no money. That was the only problem. And one day I was sitting down with a friend of mine, and he'd also been a client of mine. And I told him about this dream I had of starting my own firm. And he says, "Arnie, that's great. I think you could be good at it." And I said, "Oh, thanks, Bob." And he said, "Where's your office going to be?" I said, "Oh, I don't have an office. I'm working out of my home." Well, I lived in a studio apartment. He says, "Arnie, you can't be an investment counselor out of your studio apartment. I mean, where are you going to bring the clients?" And I said, "Well, we could meet for lunch. I don't know. I mean, I don't have any place to go." And he says, "You got to get an office." And I said, "Oh, I would love to get an office. I just don't have the money." He says, "Well, how much would it cost to lease a place and get some furniture and furnish an office?" I said, "I haven't thought about it because I don't have any money. I could barely pay my own rent." So he said, "Oh, no, you got to have an office." I said, "Bob, I don't have any money. You don't understand." He says, "No, I do understand." He said, "I'll tell you what, let's go back to my office." And I said, "What for?" He said, "I want you to make a budget. I want you to tell me how much it's going to cost to start an office, and I'm going to lend you the money." I was just amazed, just like that. So I said, "You really mean that?" He says, "Oh, yeah, Arnie, it's my pleasure. Come on, let's go to the office." So I went to the office. He pulled out a pad. Let's see, chairs, furniture, rent. So I tried to keep it real low because I didn't want him to think I was taking advantage of him. So finally we came up with about $2,500, $500 for rent and furniture. I bought a desk out of a guy's garage. He was a CPA, had an office in the garage. Nice desk for $125, a couple of bookcases, oak bookcases for $30 a piece. Now, the $2,500 in today's money would be about $15,000, $17,000. Well, then I went and looked for a place to rent, and I had a friend of mine that was an accountant, and we were going to share an office. So we both went and looked at a rent, and at that time, Century City was just decimated. There was a big real estate bust there, and the whole buildings were empty. I mean, there were buildings, beautiful brand new buildings are empty. So I knock on the leasing agent, and this guy, I still remember his name. His name was Curtis. He was just a great guy. I told him, "Look, I want to start this investment company, but I don't have much money. You got some office that doesn't have to be the nicest place in the building, just little office I'd like to rent?" He said, "Oh, Arnie, I've got just the place." This was the executive president of this big company. Beautiful office with walnut panels and all that. I said, "Oh, Curtis, I couldn't afford it." He said, "Wait, let me show it to you, and then you decide." So anyway, the rent was $500, which would be about $5,000 a month or something like that today. So it was a lot of money. So my buddy was going to pay $280 because he got the biggest office. I was paying $220. Well, every month, then he said to me, "I'm going to give it to you guys at a price that you won't believe." So it was 41 cents a square foot. And I was in another building when I was in the insurance business, was dilapidated, cost 41 cents a square foot. So this is like getting a Cadillac for a Chevrolet price. We were just really excited. Well, it took a lot longer to get the business going than I thought. And every month I'd be behind in my rent. I'd knock on Curtis' door and he says, "What's up, Arnie?" I said, "Hey, you know, I only got about $200 for the rent this month. Can you spot me until next month?" He said, "Sure, don't worry about it." So every month I had to go to him and tell him, but we always paid him and he was always cool about it. So I stayed in that building for about 4 or 5 years. And that's why I named the company. It was Century Management. It was Century City in California, so I named it Century Management. So anyway, that's basically how I got started. It was just a dream. That's all I had going was a dream, but it was powerful.